Welcome to the 8th video in this series on zero-based budgeting and cash flow management using the Managing My Money Excel tool. The first set of videos on planning provided an overview of zero-based budgeting and the Managing My Money Excel tool. It also showed how to use the tool to create a zero-based budget and how to set up an annual expense plan. The second set of videos on tracking demonstrated how to record expenses and how to use the functionality provided in the tool to simplify that process. This video is part of financial control and will focus on annual expense management. I will explain what annual expense management is and how to do it using this spreadsheet application. I will then demonstrate this process with 3 scenarios. Expense management is an essential part of financial control. This is where you become empowered to achieve your goals and improve your financial well-being. Many people have trouble sticking to a budget because it seems restrictive and inflexible. However, a zero-based budget does not have these problems if managed correctly. In fact, it can be so flexible that you can easily adjust your spending plan in just minutes every single month and still be on track to meet your financial goals and priorities for the year. Why is this? Well, when you created your zero-based budget, you were really making 2 separate spending plans. The first plan is for monthly expenses, and the second plan is for annual expenses. These are managed separately to keep the time required to manage them small, and to keep focus only on the key parts that you can control. By doing this, you can easily see where issues may arise, and you have the tools to simulate corrective actions in just minutes. The previous video discussed monthly expense management. If you have not seen that, then I encourage you to do so, as financial control encompasses managing both of these plans. In this video, we explain annual expense management. Annual expense management only focuses on those expenses that are infrequent in nature, or which may occur at unpredictable times. Similar to the monthly management session, it will use a form of envelope system in which you can choose each month where to allocate the remaining dollars you have for the year. However, you are limited to the total dollars you planned for the year. The annual expense management planning session is done approximately once a month. In the session, you will review the expenses made so far this year and then prioritize or replan what to do with the remaining dollars you have allocated for the rest of the year. To simplify things, a good number of your annual expenses are fixed. They're just infrequent in nature, so you do not have to spend time on those. You only need to replan around the variable expenses that you can control. That is what allows you to do this annual expense planning session in just minutes per month. However, to properly do this, you must have your expense tracking sheet up to date. So I recommend to keep the expense tracking sheet updated as frequently as possible. Every 2 to 3 days, but at least once a week. You can use the tracking tools available such as auto-categorization to simplify this process. Please view my other video on expense tracking for details. If you feel that you are struggling to keep up with tracking your expenses due to the time that it takes, then I highly recommend to consider auto import of your bank and credit card data. Please view my other video on bank data import for details on how that works. That does have a cost associated with it. However, I consider that cost to be worth it if it makes a difference between having the data you need in place to properly manage your expenses each month or not doing the expense planning at all. The once-a-month annual spend review is a 3-step process. First, press the Update from Transactions button to populate the year-to-date annual expenses. Second, we look at the plan balance box to see if it is green with a value of 0. If it is not green with a value of 0, then we update the future spend plan to turn it green with a value of 0. Finally, we review again the planned expenses for the rest of the year to confirm that we've not had any priority changes or long-term plan changes. If we do not have any changes, then we're done. If we do have changes, then we update the future spend plans accordingly, keeping the plan balance box green with a value of 0. That is it. So now let's run through some examples. I have 5 examples set up. The first scenario is titled All is Well. To set the context here, March has just ended. We're in the first week of April, and we're now having our once a month annual plan management session. So we will go ahead and click the button and update the transactions. When that's done, we will look at the plan balance box. So update is complete. Now we look at the plan balance box here and we see that it's green with a value of 0. So everything looks good. So now I'm going to look at my expenses. So for the month of April, so I have let's say $200 planned for office supplies, $100 for yard upkeep, etc. I can look down through here and say, is there anything that's changed for this month that I don't expect? And the answer is no. And I can look at the rest of my plan and say, well, let's say I have some travel expenses later in July. Is that still on track? Yes, I don't really have anything changed. So at this point, we're done. With just a few minutes, I was able to update my transactions, confirm my balance, that everything looks good, look at the plan, and that's really all that I need to do. So that was scenario 1. Now let's look at a second scenario. And this one is going to be slightly different. So on this scenario, we're going to be looking at the impact of an overspend in a previous month, the recurring monthly expenses like groceries, eating out, things like that. Those are typically handled in the weekly monthly expense planning session. But in this case, we're going to say that we overspent. The way I'm going to do that is I'm going to go ahead and go to my tracking sheet. And for the month of March, I put in a placeholder for some entertainment that is going to go over our budget for last month. So we spent $100 on Top Golf. So now in this case, when I update from transactions, we will see that the once the update is complete, that it's going to show a $100 overspend on my plan balance. And I can see that if I want to know where that overspend came from, I can look in March and I can see on the monthly expenses the difference from plan that I had spent $100 more than I had allocated for last month for the monthly recurring expenses. I need to see what I can reduce in my annual plan to cover the overspend. So in this case, for this example, I'll decide that if I look at the haircuts, I had planned a large expense. I have like $375 expenses through the year, possibly hair coloring, whatever. So in this case, I'm going to go ahead and reduce my hair expenses by $100 this year to cover that overspend and bring me back in plan. So now, what you'll see here is, notice the last column. The way this system works is when I reduce it. Let's say I put this down to $50, right? Let's say $75 here to reduce it by 100. It's going to reallocate that money to the end because it tries to consume. It thinks, hey, this is your budget. You want to spend all your budget, and so if you're underspending, it'll just push all that money to the end. So for me to free it up, I'm going to go ahead and override that and push this back forcefully to 75. Now you'll see here that on this box here, it shows that I have $100 of this $1,000 budget that I do not have allocated in the year. That money will offset my overspend that I have here and bring my balance to 0. So effectively what I've done is I've seen an overspend and I've adjusted my plan for the year, and we are now back on track. So after doing this, the next step will be the same that I did in the previous scenario. I'll look at my expenses for April and make sure that everything's still looking correct and for the rest of the year, and if it is, then I am done. Okay, so for scenario 3 is going to be similar to the previous one we looked at, except instead of an overspend, we're going to actually show an underspend in the previous month's recurring expenses and the options for handling that. So the way I'm going to accomplish this is I'm going to go back to I brought us back to the normal starting point. I'm going to go back to track sheet, and I'm going to update. I'm going to actually give, instead of giving a $100 expense towards entertainment that would bring me over budget, I'm actually going to give myself a credit. Let's say I got a refund from Topgolf for $100. That's income coming in, a credit coming in towards entertainment that I didn't spend last month. So when I go back to my um, annual expenses sheet, let me go ahead and update. Okay, so now what we see here is a little bit of a different scenario. Now we see that the balance box is green, but it has a positive value of 100. And when I look here at my plan difference, instead of a negative 100, I see a positive 100. So basically, that's a credit that came in. I'm actually have $100 at the end of the year that's not accounted for. So there's a few options that I can do here. One, I can choose to allocate this money towards any of my annual expenses in the future. For example, I can go down to my savings plans and say, oh, great, I underspent my in March for my monthly expenses. I'm going to go ahead and up my savings plan by $100 and consume that $100, right? Or, as an example, I can then say, maybe I want to my travel expenses, right? So I have $1,500 in July and $1,500 in December. Maybe I say, okay, I'm going to take that and roll that into my travel expenses and give myself an extra $100 in December. So in that case, for example, let me go ahead and put in $1,600 here, and you'll see what it's going to show here is a $100 credit because I underspent here, and then a $100 over the planned budget, but that's fine because what I'm really looking for here on my zero-based budget is to keep this planned balance box to zero and green. So what this is basically saying is I am funding an extra $100 for travel above the $3,000 due to an underspend somewhere else, right? So, or another option could be, I'm going to put this one back, that I leave this $100 here, and then next month, let's say that next month I want to actually use that $100 towards a special entertainment or dining out or one of my monthly expenses. We're going to splurge on some of the monthly expenses and not change my annual expense. I can leave this temporarily at a balance of a green with a positive balance, knowing that next month I'm going to go ahead in my monthly plan. When I go to my managed month, I'll see that that $100 is available and I can go ahead and afford to go over $100. It can be not just towards entertainment. When I plan it, it can be towards any of these items, right? Knowing that I'm going to, this will then return to zero the next month because I'll have a positive 100, that's a credit, and then in April I'll have a 100 overspend against my monthly expenses budget, and that will cancel out and I'll have a zero here. So as I mentioned, there are options. So once I've done that, I've decided what to do with this extra $100. Same thing, I look and see, has anything changed in my April plan? Anything changed in my future plan? If no, then we're done. Okay, two more scenarios. Let me look at scenario 4, which is unexpected event. So in scenario 4, we had a couple of unexpected events. So string of bad luck. Our car broke down at the end of March, causing a $400 unexpected expense. And we also had a visit to the emergency room the first week of April, resulting in a $200 copay. Now, if I look at my my auto maintenance, I have no money planned for March or April for that expense. I have some stuff in July, August, November. If you look, I have $1,600. The bulk of it is pushed into at the end of the fiscal year. Same thing with medical, but purposely, if you remember when we did the planning video, we left all of our medical at the end of the year because we didn't know when medical things would arise, but nothing's planned here. So let's go to the track sheet and let's enter those expenses. So at the end of March, I had this $400 repair for my car. And then on day 2 of April, we had a $200 medical copay. So when I come back to manage year, now it's the beginning of April and we're going to do this planning session. I hit go, and what we will see is this completes that we now see this $400 charge in March, but our plan is still green. We also see on medical, we have this $200 charge, an actual charge in medical for April. A couple of things you'll notice. One is, despite these expenses coming in, we're still green. We're still on track. That didn't derail our plan at all because it's already built in, meaning these are annual expenses, not monthly. So what it did is it pulled forward. Before, this was $1,600 allocated at the end. It pulled 400 of that forward into March and then reduced this to 1,200. So we're still green. Same thing with medical. With the medical one, what it did is it said, oh, we had a $200 actual expense. We had nothing planned. It's going to up our plan to 200 because that's what just happened this month. And it's going to deduct the 200 from, it's going to pull 200 out of that. This was 4,000 before. It's going to take 200 out of that budget fund and allocate it towards this month. All of that's working. That's the way the annual plan works, right? It allows us to not have to plan in detail exactly when things are going to happen, but we know that the money's there and we can use the system to track with the plan balance box to make sure, and this this balance at the end of the year, we can see that these are zero, so we're still on track. Now let's look at a little bit of a different scenario here. So in this case, in both of these cases, we had expenses that came in that didn't really exceed our budgets. There's no big, they're unexpected, but they're handled. They're in the plan, right? Let's take another example here, a plan change. So if I look at my spa, massage, nails, we have $400 budget assigned for the year, and the plan had been to not really use any of that until November. We're going to use about $89 in November, and then a big trip in February for next February, end of the fiscal year, for $311. But let's say that some events happening now in April, and we're planning to spend $350 this month on that. So maybe later this month. So let's go ahead now and say, okay, I've done my update. I'm all green. The next step, as you know, is to go down this list and say, is my plan still correct for this month and for the rest of the year? And all I'm going to say, yes, that's true, except for one thing, right? I'm planning now, I had not planned it before, but this $350 that I'm going to spend here, right? Now, when I do that, you'll see that if I spend $350 here, it's taken all the money I had left end of the month, pulled it forward, and I'm still short by $39, right? I don't have the money. So now I have some options again, right? The main thing is that now that we see that that's happening, we can now take some action, right? So one thing we can do, for example, is to say, okay, well, let me go ahead and reduce my my expense here from $89 down to something like $39, right? And that will bring me back to zero. I'm on plan. I just have to remember that in November, that's all I can spend. Actually, I'm wrong. There's $11.39. I underdid that there. What's that? $50? Yeah, $50. So that consumes it all. So basically, I just have to remember in November, when I want to do nails or spa, massage, whatever in the family, that's the limit of that we can spend. Now, if I really still need that $89 here, then that means that's $39 I still have to offset from somewhere else, like we did before. We can then say in that case, for example, okay, you know what I'm going to do? I'm going to go ahead and take that out of my office supplies from this month, right? So I'll go here and say, instead of $200 of office supplies, I'll spend maybe $161 or something like that. So what that will do is, and again, it's going to give me the credit here. I'm going to force that to zero. And now you'll see again my offset. I've taken I funded this extra $39 out of my office supplies budget for the year, and I'm back to zero. So that's how you would handle some, a plan change, right? The main point is that any change in plan that causes you to go over, you have to either reduce future spending, like reducing this one here to bring you back in place, or change your priority, prioritize this over something else you have planned and reduce that budget to offset it. The goal to keep this at 0 and green. So one more scenario. We'll go to scenario 5. For scenario 5, we're going to simulate a changed priority for the year. So for this example, again, first week of April, everything's good, everything's green, looking good, and we've reviewed our plan, everything looks great, except that, hey, in the family, we've been talking about, wanting to purchase this $800 motorcycle, right? Sounds great. Everybody's excited about this, purchasing a motorcycle for $800. Now I look at my plan for the year and say, where's that $800 going to come from? That's the key question. So it wasn't in the original planning session for the year. So before I can add it in for my zero-based budget, we need to look how we can offset. So there's lots of options that we can do, right? So I'll just go over maybe 5 options. First option, we can decide that, purchasing the motorcycle is more important than the July travel plans. So we can go ahead and go to our July trip and reallocate, basically reduce that by $800 down from $1,500 to $700, and then that will free up the $800 that we need so that we can add in a budget item for the motorcycle. That's one option, right? A second option would be we can look at our gym costs. So for example, I look at my gym, I have this big $2,900 expense in October. That comes with scope of services, right? It could be that we talk with the gym owner and de-scope our services to free up some money. So we pay only $2,100 in October, and that frees up $800, and we can add an item in for the motorcycle. Or, we can decide to reduce our savings goal. We have a savings goal for $2,000, and we might say, okay, we're going to reduce our savings this year to $1,200 and allocate $800 for a motorcycle. Or we can do any combination of these. For example, we can reduce travel expenses by only $200, reduce our gym expenses by $400, and reduce savings by $200. That combination will then cause this green balance box to go up by $800. The main point would be that we've got to get this green balance box up by a positive $800, and then once we've done that, we can go to the expenses and add in an expense for the motorcycle, an item for $800, and it will all be green. Then this will go back to 0. Of course, the fifth option is we can decide that the new expense is not worth reprioritizing our other plans. For example, we might say, hey, our health plans and our gym and our travel plans, our family time with travel, and our savings goals are all more important than this $800 motorcycle. So in that case, what we might do is say, okay, well, why don't we then maybe put in, maybe try to find a way to up a bit our savings for that motorcycle, and maybe we save $400 towards that motorcycle this year, because we can afford to maybe de-scope $400 through some of these other priorities, and then purchase it next year. So the point would be that when a priority change happens during the year, some new expense opportunity comes up, that you now have a way during this monthly meeting to talk about those in context of all the money that's coming in through the year, to make sure that you don't put yourself in a bad situation, that you're able to handle it and come up with a good plan. So those are the 5 scenarios for expense planning. I will note that today's examples are focused on the plan and staying green. They did not consider cash flow. So that is the topic of the next video in the series. We'll be going over the forecasting and cash flow. I hope you found value in what you saw in the demo and what this spreadsheet can do for you. If you did, you can send an email to mmm.expenseplanning@gmail.com for instructions on how to download and use the spreadsheet. A reminder of the prerequisites are that it requires a local version of Microsoft Excel running on Windows 10 operating system.